Are you aware that YouTube pays for views and fear is a big seller? So imagine trying to predict the future of the housing markets amidst all that sensationalized prediction. Some are claiming that a crash is imminent and the sky is falling and hide your kids, hide your wife, hide your husband, while maybe some have a more mild approach of sunny outlook, or that the markets are good and everything's going to be just fine and we might even see growth. Kind of confusing, right? Let's cut through all that noise. Hey, by the way, my name's Edward Fuller. I'm a real estate agent out in Salt Lake City, Utah. Feel free to call me or text me. I have some information below that also takes you to my website. You can register and I will personally reach out to you. So in this video, I'm going to simplify the whole thing by giving you insight as to what actually drives the market in its most simplistic form, and give you a couple key takeaways to understand some of the things and factors that affect home prices as well. And yes, I will give you my prediction towards the end. Join me as we unravel the Utah housing market and what 2024 may hold. Getting into understanding what actually drives the market, there's a couple key things that you need to know that are the true drivers and what really affects housing prices. It's simple. The baseline is supply and demand. So the amount of homes available versus the amount of buyers or people actually looking to buy a home. That's its rawest form right there. Mortgage rates clearly, obviously affect this as well. If the mortgage rate is high, that's going to, discourage some people from buying. If the mortgage rates are low, a lot of people get in. So you can see how the prices will go if we don't have enough houses. Also foreclosures. You might be saying, okay, what the heck is a foreclosure and how does this affect it? I'll actually cover foreclosures and what the role they play here in a little bit. If we look at demand and what it typically is, so on any given year, there's about 5 million homes across the whole US that are sold. Let's see. So this year we clearly, we're down by a significant amount. As mortgage rates started to decline, we saw a significant increase just in this last little bit of probably close to like 10%. And then in 2024, we're expecting to see even continued growth. So right now we maybe had at the end of 23, we had 3.5 million-ish through the whole US. We're probably going to see about 12% increase. So demand is very much there. And that 12% is about maybe 500,000 more people purchasing or homes being sold. So that demand is very much pent up, especially if you look at, like I said, when the mortgage rates came down the last couple of weeks, we saw at least a 10% uptick in mortgage applications. So there's still a lot of people out there wanting to buy. Now that we see that demand is relatively strong considering the environment we're in, what does supply look like? This is where the trouble comes. Availability of homes is actually at an all-time low. We've had less than half of the amount of available homes since the Great Reset, that 2008 crash that everybody kind of remembers and is judging all this off. Utah actually is in such a huge deficit of homes needed. So right now, currently, just to satisfy the amount of people that are here or families that are looking to purchase, Utah would need to produce or build 28,000 units. That's including condos, townhomes, and single family. 28,000 units. Well, here's the problem. Over the last couple years, we have had a significant decrease in the amount of permits that have been pulled. Actually, it's down by 19% from 2021. So obviously this has worsened this 28,000 figure. We're expected that next year, just alone, we're needing 37,000 homes built. So you can see that the supply is a huge issue and demand is still very much there. Another contributing factor of the low or limited supply is a scarcity in homeowners. They're truly reluctant to get out of these properties where they have a low mortgage rate. And who can blame them? Their payment's probably super cheap. So there's another handcuff. I call it the golden handcuffs, if you will. 60% of those home buyers are in a low mortgage situation with below 4. That's just making them super hesitant. Why would they trade out, their low mortgage? We talked about building permits just in Salt Lake City alone. Just Salt Lake City in Utah saw about a 14% drop in, builds or permits being pulled. So we have a huge issue with supply, and that's obviously driving some of these prices. Foreclosures. I touched on this briefly at the beginning. Foreclosures is where you see a lot of these sensationalists that says foreclosures are going to go through the roof and everybody's going to, saturate the market and saturate the market, I mean more supply coming online because people are losing their homes. Here's the deal. Foreclosures are at an all-time low. I personally look at what's called an NOD list, which is a notice of delinquency list. They're pretty much non-existent. A lot of business models from realtors that were, designed to help these people out of these situations and sell these properties have now shifted because there's just not a lot there. And to top it off, these foreclosures are really going to be a factor because let's say somebody that bought not long ago and had it as a 2% mortgage rate, that payment is probably really, really low. So instead of losing that property, they actually have the potential to rent that property out, not lose money, but even maybe make money and not foreclose on that property and then maybe sell it, after they've gotten caught up. So they have some out. So with all this lack of supply, it's really done a number on the last couple of years. Like everybody has seen this significant increase in prices. I think from 2019 to 2022, we've seen about an average of 13% increase. That's insane. And even with the high rates that we've had over 2023, we've still seen about a 1% increase in home prices. Actually, that's what we're ending the year at, is about a 1% increase in prices. NAR and Redfin. So Redfin predicts that we will have an increase in buyer activity and a slight increase in available homes, but a 1% decrease in property values. NAR is a little bit more bullish. They predict an increase in activity, a decrease in inventory, and an increase in property values. I believe we're going to have an increase in property values because we still don't have, like I've said, enough inventory available or homes available for people to purchase to give enough availability to bring those prices down. When we actually do have people that are looking to sell, they're most likely buyers too. So it's a 1-for-1 swap. So we're really not gaining anything. So I think we're probably going to have about a normal appreciation year for 2023 with a significant increase going into the middle of Q2. So 4 or 5 months into the year, we're probably going to have quite a few people jumping in because I predict, we might actually see mortgage rates into the 5s. So that's going to spur a whole bunch of people getting in. We could see a boom in prices. Actually, we will. I'm going to go say that we will see a boom in prices. So take advantage of right now. That's my real big advice, is get in before that, because I think the people that actually purchase now are going to be looked at like those people that bought during the pandemic, where they have a whole bunch of equity, because I believe we're in a little bit of a trough before a peak. Yeah, so that's really it. Supply and demand. Right now we don't have enough supply and there's still a good amount of demand. So yeah, hopefully you got some really great value out of this. Would love to hear your guys' feedback, or if you have some questions about the market to come for 2024, would love to hear for you. As always, like and subscribe. And yeah, love you all. God bless. Have a great day.